NDTV Profit. My name is Alex Matthew. With me is Mahima Vachajani, and we'll take you through the next 1 hour of trade. This show is geared towards getting you answers to all of your stock-related questions, and so many stocks are buzzing, despite the fact that you don't have a very large move at the benchmark level. Let's get you through what is happening in the markets as things stand right now. And there was anticipated to be a little bit of caution ahead of the monetary policy outcome, and that's tomorrow at 10 a.m. And that is panning out, though we're trading with gains of about 0.4% for the benchmark Nifty 50. And through the week, you've seen an outperformance of the broader markets. That continues to be the case today as well, with the mid-cap index gaining about 0.5% or thereabouts, and you have the small cap index up about 0.75%. So this is something that panned out in trade yesterday as well. The mid-cap index doing particularly well yesterday. Today, the small cap index is outperforming. And overall, I wouldn't be surprised to see the market breadth will be tilted once again in favor of the advances, and quite significantly so. In fact, yesterday the gap was much narrower through most of the session. Let's see if that strength continues. Not too much in the way of big movers on the sectoral front though. In the Nifty Bank, just about 0.1% higher, but pharma is doing reasonably well today, up about 1% or so. You have metal that's up and about again about 0.5% or so, and auto is just about languishing with gains of about 0.1%. We've been speaking about the story of rare earth availability after China has restricted exports of that, and that affects a lot of automakers, remember that. Let's kickstart things by introducing our experts for the day, and then Mahima will take us through the first question. We've got Kush Bora, who's the founder of kushbora.com, and Prashant Tapse, who is the Senior Vice President Research Analyst at Mehta Equities. Thank you so much to the both of you for taking the time, and good morning to you. Just a quick reminder before we start, if you're writing to us for the first time, you can write to us on the number on the top of the screen, or you can call us. We'd love to speak to you. We'd love to hear your voice. Do call us on the number at the bottom of the screen. That is the landline number. What's the first question today? Right.
So the first question today is from Dilip, who's writing in from Gandhidham, Kutch. And his question is on ITC. He's bought 500 odd shares at an average cost of 429 and wants to continue to hold and also acquire more from a longer term perspective, that is 3 years. Hi Prashant, good morning and welcome to Ask Profit. I'll take this question up with you. ITC is the counter. I was just looking at Bloomberg estimates for FY26 in terms of ITC. They're expecting roughly a 12% growth YOY basis. What's the outlook like? And also in terms of PE, if we look at FMCG staples, ITC is the cheapest available stock right now.
You rightly pointed out with respect to PE, but again, if you see the defensive stock, I think ITC is giving a lot of comfort level at this point of time in terms of valuations, as per the expectations of the Bloomberg, as per as our research concern, again 10 to 12% of growth and 6 to 7% of volume growth can be expected quarter on quarter from ITC. And I think for a long-term perspective, 410, 420 is a good range to start accumulating ITC. Again, there are a lot of triggers again going forward in ITC with respect to their price hike. I think in next 1 or 2 months, there will be a big price hike coming into their products. So that would be the first trigger, and overall long-term very positive.
Okay, all right. And the dividend yield is nothing to scoff at either. So are you suggesting a fresh entry at this point?
Yes, very much. Again, I think Kush Bora can help us for best entry.
Okay, Kush, that's my cue to go to you quickly on ITC. Would you suggest a buy at this point?
So Alex, from a 3-year horizon, why not? I mean, the stock's actually consolidating in a good, in a good zone. Supports near 400, 410 marks. So not a bad idea to start accumulating here, especially if your horizon is, as long as the one that's being discussed. Okay, all right, 3 years.
Kiran is calling us from Hyderabad, the first caller for the day. Kiran, very good morning to you. How can we help you today?
Sir, good morning. I'm holding Apollo Hospital shares.
Okay.
Actually, 51 shares of Apollo Hospitals at 6962 rupees.
Okay.
So should I hold on for the next 1 month in the same counter? Or there is should I shift to something like Dr. Reddy's, where LIC have increased their stake of about 1%, or something like NTPC for a short term of 1 month trade? Should I stay with Apollo Hospitals, or should I shift to something like NTPC or Dr. Reddy's is my query.
So you've identified a few stocks, but they're very disparate. There is Apollo Hospitals from the hospital space, there is NTPC, and the third stock was?
Sir, Dr. Reddy's.
Dr. Reddy's in the pharmaceutical space. Got it. Got it.
Yeah.
So, but you're only looking for a 1 month time frame. So I'm guessing you want a view on the technical charts. Kush, you don't necessarily need to stick to the alternatives that he has suggested. What's the best play from a 1 month time frame? And Apollo Hospitals, would you venture in right now?
So, Alex, given that the stock is very close to its buying price, it might not be a bad idea to continue to hold. Now, the stock is consolidating near the 200-day moving average, albeit with a negative bias. That's a bit of a concern. The volumes aren't anything to write home about. I mean, just yesterday, they were up, but other than that, on the downside, the volumes, in fact, have been stretching a little. So he could continue to hold on to this one with a stop loss around the 6,800 mark. Any bump up, towards the next resistance levels of 6,960 and about 7,030 will actually put him in profit. So why not continue to hold on? And since he's rolled in a couple more queries, Dr. Reddy seems much better placed in NTPC if he wants to consider for a month.
Okay, so that's with regards to where these pharma companies stand. Our next question is from Shivani, who's writing in from Mumbai. She's holding 443 shares of JK Paper at the price of 446, and this is from a 12-month perspective. But she wants to know now as to what should be her next target on this particular counter. Kush, I'll stick with you for this one. In terms of fundamentals in Q4 numbers, the stock tanked when the numbers came because net profit almost slipped around 75%. But where charts are concerned, there was some momentum a few weeks ago, but does the momentum still hold for this particular counter?
Mahima, very interesting setup on this one. For the last 4 weeks, this has been making higher highs. So, momentum definitely continuing. It's just that it's starting to flatten out a little, and that you can see in the volume traction as well. Maybe if you just club this with the kind of moves that the market has made over the week or so, I think this is still a very healthy sign. You'll continue to, stay put in JK Paper. Now, my concern is that the next levels of resistance for this one come at 400, and once that is taken out around the 435 mark, which I believe are still a little lower than her buying price. But nevertheless, with the kind of setup that the stock is seeing, it's not a bad idea to continue to hold on. 355 is the stop loss that you should look at. Maybe not in a profit in the next couple of months' time, but certainly in lesser loss that she's looking, she's staring at today. So with that view in mind, JK Paper is a hold.
Hold with a stop loss of 355 is the view coming in on JK Paper. All right, our next caller, Sampath, is calling in from Chennai. Sampath, a very good morning to you. How can we help you?
Good morning, Mahima. I hold 500 shares of Orient Pro. I bought at 148, okay?
Okay.
Can I add more at current levels? I'm sitting on a profit. Can I add more at current levels? I have some money to spare.
I see that you're sitting on a significant profit of 6 lakhs. So congratulations on that. Sampath, you want a fundamental view on this one?
Yeah.
Okay. I'll take this up with you, Prashant. Then Orient Pro is the counter. What's the outlook like?
Very wonderful profits the client is having right now, but I would like to advise him to have some kind of profit booking at this kind of time, not to add more at these levels again. I think valuations are again at the peak. 40p is not justified right now with the growth what the company is delivering. So I think the stock may see some kind of correction, some kind of valuation correction, and then that would be a good level to start accumulating. That would be again a good level would be around 1320 or 1300 levels.
Okay, all right, so that's the view on Orient Pro. Okay, so since you're saying book some profits, let me round that off. Kush, very quick view. What key levels would you watch out for to book those profits?
Alex, in fact, I would suggest a trailing stop loss strategy the way I do, in momentum trades or trades that have been, been profitable for the investor. So in this case, the stop loss is at, or rather the trailing stop loss in this case is at 1325. But my suggestion is to continue to hold on to this one. For the last year and a half, the stock's been in a bit of a slump, but it's been coming off a stellar run. It's already been a multi-bagger for him as well. So 1325 is the trailing stop loss. You might want to perhaps book some if it comes to that level, but otherwise continue to hold.
A story over the last 5 years, phenomenal, and kudos to you for having identified that and for holding with the gains that you have. We've got the next question from Vijayawada, and Ramana is writing in asking about Kfintech, which has been bought at a price of 1,066. Again, this is a very, very substantial and healthy profit that Ramana is sitting on, 2 lakhs or thereabouts, because the buy price is 1,066. The stock is currently at 1,168. The quantity is significant, 2,000 shares. What should your strategy be at this point? Kush, would you take some money off the table or would you hold for further upside? The stock is up, I believe, 7.5% over the last 1 month.
Alex, the very clear answer on this one is a hold, because not only on the daily time frame, even if you look at it from a weekly setup, you're seeing the tide turn a bit. Of course, this stock is prone to volatility, and hence, some wild swings are understandable for a stock like this. But other than that, if you see the medium-term trend, the near-term trend is starting to look up. So why not extend those gains? So what I would suggest once again is a trailing stop loss. In this case, it would be at 1050 levels. There is a convergence of certain technical support zones at that level. So maybe that could act as a trailing stop loss. But as I said, the tide seems to be turning on the way up. In fact, I would suggest a target of 1275. Once that is taken out, the 1350 as well is on the card. So a hold, and as the stock moves higher, continue to trail your stop losses also.
Trading flat today, but trail your stop losses is the view on Kfintech. We've got our next caller from Hyderabad. Ravi Chandra is calling us. Ravi, very good morning to you. How can we help you today?
Yeah, good morning, Alex.
Good morning, sir. Please go ahead.
Yeah, my query is on Canara Bank.
Okay.
So since tomorrow RBI gonna announce their monetary policy.
Yes.
So just want to know whether the share price will go up or down so that I can initiate a buy.
Ravi, that's a very tough question that you're asking. And I think if people knew in advance whether a stock is going to go up or down tomorrow, they would make a lot of money. But having said that, what you're trying, and can I ask you a question? You're asking for the long-term outlook on Canara Bank, yes?
Yeah, I can hold for 1 to 2 years.
Say that again, you can hold for?
1 to 2 years.
1 to 2 years. Okay, so what you're trying to get is the best opportunity in the price to buy. So first, let me ask whether Canara Bank is the best option in the banking pack, and what you're trying to play is the fall in interest rates and the potential increase in loan growth. So let me ask first, Prashant, on the fundamentals. A lot of people have talked about the fact that banks are going to see their net interest margins come down, but then the counter argument to that is that because a repricing of deposit rates could take place, you could have a situation where banks can get through that cycle very quickly, and loan growth coming in would be perhaps a bigger positive. Alternatively, the NBFC story could also be played because their cost of funds would come down, and of course, not just your retail NBFCs, but even your power financiers, for example. You had REC announce that it's going to raise as much as 1.55 lakh crore rupees over the next 12 months through NCDs, and if they pick up that bulk at a lower price, and assuming that we have a rate cut tomorrow, 75 basis points already has been passed. So therefore, would you pick an NBFC or a bank for the next 1 to 3 years?
I think with respect to growth in the market, I think credit growth as well as the loan growth, I will pick NBFC against the PSU banks or the traditional banking system. But the question is on Canara Bank. I think on valuation terms, it is trading at 1 price to book value. I think it's the right time to start accumulating this stock. The way how RBI has given a lot of liquidity from last 2-3 meetings, I think that will bring a lot of credit growth for the companies, and even deposit growth is also coming into pictures. Recently, there was a news saying that Canara Bank is going to have a zero balance account for every thing. So that will bring some kind of pressure on the margins. But again, I think the loan book is growing faster than the deposit growth. So that will bring a lot of growth in the Canara Bank. But again, preferred would be NBFC. I think you rightly said with respect to lowering of the interest rates, will have a better NIM margins growth in the NBFC space.
Would be your pick in the NBFC space then, Prashant?
I think better go with Bajaj Finance, be the largest large cap player only.
Okay, and you're comfortable with the valuations at this point? What is a return potential for Bajaj Finance in your opinion?
I think 12 to 15% can be expected for next 12 months in Bajaj Finance.
Okay, 12 to 15%.
Okay, interesting. All right, the next question is from Rohit, who's writing in from Nagpur, and he wants to know if he can hold Eternal from a longer term perspective. His buying price is at 198. He's not given us the quantity, but Prashant, I'll come to you on this one. With Zepto filing its IPO, filing at least planning to file its IPO, and with an MS Swiggy note yesterday where they were bullish on Swiggy, and we saw the kind of uptick that the stock saw yesterday. Which one would you prefer right now? Would it be a Zomato or a Swiggy?
Portfolio stock, again, I think we should have both stocks in the portfolio because we know how the sector is moving faster than every sector right now. I think Eternal, again, we were lucky to catch the stocks very few days back, and I think my target would be anywhere between 65 to 70 to 65 to 70 on a trading basis. But again, as an investment, 300 can be a target for Eternal due to two things. One, the way they are expanding the dark rooms against Again, second, the industry is going very, very fast. Again, third would be Zepto, the third largest quick commerce company getting into market. So there will be some kind of higher valuation expected in the market. So obviously Swiggy as well as Eternal will try to match those valuations in the market. So overall, very bullish on the Eternal on long-term basis.
Okay, so that's with regards to where both of these food delivery company and of course quick commerce companies are concerned. Our next question is from Mansing, who's calling us from Andhra Pradesh. Mansing, a very good morning to you. How can we help you today?
Good morning, madam. I'm holding the 200 shares of Nawa Limited.
Okay.
Average price 101 rupees.
Okay.
101 rupees, madam. Currently it is trading 533.
Okay.
Those 200 shares are FOC, madam.
Okay.
Should I continue to invest in this? Should I sell? Where to park these money?
Sell to?
I want to sell 100 shares.
Okay.
If this long-term prospect is not good,
Okay.
I wish to sell 100 shares and that money, where should I park that
Okay.
money?
Okay, got your question, man. I'll take this up with Prashant again. Prashant, he's already invested in Nawa and he's sitting on a profit of around 87,000 odd rupees. What he's saying is, out of the 200 shares, he want to sell 100 shares and park it someplace else. What would you suggest?
I think wait for some more time. Again, I think there will be a lot of good momentum coming in the stock. At least 10 to 15% from the current levels, which can be a good level. Again, 600 plus. There he can think of selling 100 shares and then thinking of investing in any other stock. So second stock would be again, if you want an alternative stock, Eternal should be the second stock. Where he can park those extra money which he's getting from Nawa Bharat.
Yeah, all right. So Eternal is something that you can look at. Wow, it's on a roll today. It's up as much as 5% in trade today, building up momentum through the session. Snigdha is calling us from Hyderabad. Snigdha, very good morning to you. How can we help you today?
Hi, hello everyone. So I just want to inquire about Havells.
Okay.
So I have 142 shares of Havells at 1501 rupees.
Right.
So I just want to, keep it for 1 month.
Uh-huh.
So I just want to know if I would get any profits for this 1 month or, should I hold it or sell it?
Got it. I got your question. And did you have a level in mind when you bought the stock?
So, I just thought it would give a positive profit. So I just taken it randomly.
But did you define, for example, did you define that you wanted to grow maybe 5%? Or did you say that you wanted to grow 10%? Is there something that you had in mind when you bought this stock?
Yes.
Which is what? Did you have... Okay, all right. So Kush, would you say that if you're buying for the short term, it's important to have a target in mind? And if so, how do you determine that target?
Alex, you put her in a KBC 7 crore question kind of a situation. So.
No, sorry, I've lost your audio.
Am I audible now?
Yeah, please go ahead.
Yeah, I was saying you've put her in a KBC kind of a situation. I have to appreciate the honesty with which Snigdha answered that question, and she said randomly, but let me be a little stringent here. Randomness is not a good strategy in the market. And now, as far as Havells goes, I would exit this one. This stock started falling way before the markets did last September, and hasn't really recovered. And in fact, it's a shorting candidate. While the buy price is very close to the current price, mildly lower than that, but the setup doesn't really look as encouraging. So maybe on a short covering account, the stock would go up, but the overall setup is not so encouraging, and hence it's not a good idea to be in a stock which is in a downward momentum in a bear clutch. So Havells for me is an exit. And as I said, randomness is not a good strategy. Maybe she can come up with something different, or maybe a structured way of picking stocks. That's the only other advice I would give.
Okay, so this was not aimed at you, Snigdha, and a lot of people do this. Of course, there are popular references. If you watched Friends, then you will know that in one episode, Monica decided to buy stocks based on her initials. And there is a certain amount of luck involved. You could end up buying a stock that could go up 10x. Who knows? But then it's better to have something in mind when you buy a stock, both fundamentally and technically.
Absolutely. I mean, research is the utmost important thing to pick a stock.
Or you can call us on Ask Profit and you can ask us here.
Absolutely. All right. The next question is from Satya, who has a query on Zydus Life Science. He's holding 300 odd shares at an average price of 1080 and wants to know if this is the right counter in the pharma space to stay invested in from a 1 to 2 year perspective? Prashant, I'll come to you on this one. What do you think? Is Zydus Life Science the best bet in the pharma space?
In pharma, life science sector is the best sector one should focus more on, because again, there the margins are very much intact and a lot of negative pressures are not there in terms of business growth. I would like to go with Zydus Life Science and long-term investors, despite knowing the last quarter were not so as expected for the market. But again, valuations are giving me very much comfort with respect to forward P of 15 and price to book valuation of almost 3x. So I can consider it as the cheapest pharma stock for me to start accumulating at these levels. There may be some kind of short-term dips, but again, every dip has to be bought, and long-term is very positive.
Okay, so that's with regards to where Zydus Life Sciences stands. Our next question, in fact, our next caller, Srinivas is calling in from Chennai. Srinivas, a very good morning to you. I believe you have a query on Mobiquik.
Yes, ma'am. Good morning, ma'am.
Good morning.
And good morning, all. Actually, I bought the cost of 400, nearly 30 shares, ma'am, at 3 months back.
Okay.
Now it is around 270, 275.
Right.
So I have to keep it or have to sell or buy or hold it.
Okay. Okay, I got your question, Srinivas. I'll take this up with Prashant again. Prashant, not sure if you have a view on this one. A fairly recent listing, Mobiquik. What's the view like?
See, I don't cover this stock on a fundamental basis, but again, with respect to the new age companies which are into financial services and all, I am having a very negative outlook on these kind of businesses. I think valuations are not justified. Even the growth is very much high in the industry, but again, I don't know how Mobiquik system will perform well in the short term or the long term. But again, if he has a guts to book losses and go back to some traditional good long term investments, then I would advise him to book here and go back to some traditional good long term stocks.
And what would those be?
Like SBIs or the SJVNs and all, because I think there the downside is very limited. Again, with 2 to 3 years view, he can earn 15% return decently.
Yeah, 15% is nothing to scoff at, by the way. 15% means that if you invest ₹1 lakh now, in about 5 years, you will double your money, which is not too bad, right? At 23%, you would be doubling in 3 years, which is, again, not too bad. Something that Warren Buffett has done over a period of time. So that's something to aspire to. All right. Surya Majumdar is writing in from West Bengal and asking Kush a question. He's specifically addressed this to you, Kush. Suzlon is the name of the counter that he's talking about. He's bought at levels of 70 rupees a share. He's got 450 shares. He's a long-term investor, but he's asking whether to hold or sell or even adding more at this price is being considered. And remember, Suzlon had a pretty decent fourth quarter on the fundamentals. The question is about valuation. So first, Kush on the charts, and then I'll very quickly come to Prashant on the valuations. Kush?
First, thank you for addressing that to me directly. Despite having a fundamental outlook on the question, I think he has heard our conversation, Alex. If you remember, earlier this week, you, me, Neeraj on the morning show, we were discussing how despite a good run up and a good result, these stocks might see some corrections. Suzlon and Inoxvin, included, if I have to put some of those together. So yes, that correction has come about, or maybe profit booking, if I can call it that, has come about. Now the stock seems to be finding its base. 65, 66 is a good support zone. Since its buy price is 70 and his outlook is long term, I would suggest continue to hold on to this one. I wouldn't suggest accumulating just yet, because we want to see some momentum before you start accumulating. So maybe adding again close to the 70 mark is not a bad idea. Keep your stop losses near the 63 mark and continue to hold. I think there is a good upside still to be had on the stock. So from a long-term perspective, 12 months or out, I think 85, the recent swing high that the stock has made, once that is taken out, the 92 as well is on the cards. So Suzlon is very much a hold. As I said, the stop loss could be close to the 63, 64 support zone. And on the whole, this profit booking that has come about is healthy. So don't be too perturbed or too disturbed by the profit booking that Suzlon has seen in the last 2 weeks.
That's a view on the technicals on Suzlon, but very quickly on the fundamentals, on the valuations. Of course, the prospects for wind energy as a whole, everybody's talked about it, the fact that India is adding so much capacity and Suzlon stands to benefit. But is the valuation a little stretched at this point is a question, Prashant?
Yes, you rightly pointed out, valuations are a little bit stretched, and that is the one reason why the stock is looking at some kind of profit booking post the results. The results were really good. Even if you consider Q3, Q4, both numbers, they have performed as per the market expectations. I think correction is the point where a lot of long-term investors will get a lot of opportunities to buy back this share in the market. But again, I agree with my colleague again with respect to the targets. 85-90 can be a very short-term to long-term target from 12 months perspective. But overall, the margins are improving. The margins have improved from last 4 quarters. Again, the ROCs and ROEs are also improving. So I think now the company is almost a debt-free company. So that will give a lot of comfort levels with respect to balance sheet. Again, the overall target would be more than that 90, but again, the horizon should be like 2 to 3 years, because renewable energy, green energy, this should be a story of portfolio investment for 2 to 3 years, not for less than 12 months.
And energy transition is the next big thing for sure to look out for. All right, with that, it's time to slip into a very short break, but viewers will be right back answering all your queries on the other side, so do stay tuned.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Welcome back. You're watching Ask Profit, and we've got a long distance caller. I'm not talking about New Delhi or beyond. I'm talking about Singapore. Vikas is calling us. Vikas, very good morning to you. How can we help you?
Yeah, I'm Vikas calling from Singapore.
Yes.
I've been a regular watcher of your program, and your voice is beautiful. Basically,
thank you, sir.
The way you ask the questions, very nice.
Thank you, sir.
Alex.
Thank you.
So I have a query regarding, I want to invest 5 lakhs.
Okay.
So I'm looking for diversified companies. So we would like to hear from you on this.
Got it. Okay. I got your question. And am I right in assuming that you've got a long-term outlook, and so you can hold for a good 3+ years?
Yeah, correct.
Okay, all right.
Long-term investor.
Okay, I understood, Vikas. So let me go to Prashant. If you're looking to build a portfolio at this point, with the valuations as they stand right now, where would you deploy that 5 lakh of rupees?
Something on in banking space, and I think something on the auto space. In the banking space, again, I like SBI and Bank of Baroda a lot at this valuations at this current point of time. In the auto space, again, Tata Motors would be one stock which I am tracking a lot from last many years. Due to this recent trouble with respect to the products which are making some problem, but I think due to the demerger story and due to the long-term EV story, and even I think there are some news saying that they are coming with some hybrid model also very soon. So I think long-term story is very much intact. There is a good discount from last all-time high of almost 30 to 40%. So I think Tata Motors and SBI as well as Bank of Baroda should be a portfolio stock for long term.
Okay, so that's the view with regards to where, how you can pick and choose the counters to invest 5 lakh rupees. All right, our next question is on Vari Renewables. Venkat Ramani from Bengaluru is writing in and holding around 250 odd shares at 900 a piece and wants to know if he can continue to hold for the next 18 odd months. Prashant, I'll stick with you for this one again. Vari Renewables, what's the outlook like? I know you mentioned that renewable energy is the next big thing, but what's the outlook specifically for Vari Renewables?
I think continue to hold for at least 2 to 3 years from the current levels. As I said, again, energy, green energy, solar, and this should not be looked at the short-term perspective because you will see a lot of ups and downs or any negative news from the global markets. But again, having said that, the all-time high was 2,300. Post that there was a heavy correction in the market, and I think that's an opportunity again. Considering the ROCs and ROEs, and again valuations, again I think comfortable to justify 1,000 rupees, 1,060, 1,070 as a price. Current levels, but again the view should be 2-3 years plus. Short term you may see some kind of pressure, but again buy on dip should be a strategy.
Buy on dip should be the strategy on Vari Renewables. Now, what we do on this program, of course, is take you through a whole host of stocks, and we ask all of your questions regarding the technical and the fundamental outlook for the stocks that you want to invest in. But it's important as a fundamental investor to look at the depth of a company, and whether that's earnings, whether that's valuations, whether that's outlook for earnings going forward. All of that and more is covered on the next show, which starts at 11:30, and that is Know Your Company. Every day a stock is picked, and today the stock that is being picked is NCC, which is Nagarjuna Construction Company. The questions that are being asked are quite a few actually. How quickly can the cash tied up in working capital be realized? What are the plans to utilize the excess cash? There is a fact that the debt is increasing. Is that a concern? Can it be used to repay that debt? How is the competition shaping up in the space? And also the outlook on growth and margins, not least of which they will talk about the valuations as they stand. And remember, KYC also gives you a rating, our own NDTV Profit rating based on various metrics, so you can decide whether you want to invest in a company or whether you want to stay invested in a company that you're investing in. All right, the next question that we're taking today is all the way from France, and we've got Tamil Selvan who's writing in and asking about Mahindra and Mahindra. It's in focus today because it does manufacture electric vehicles, and as you know, we've been talking about the rare earth story. And this is a problem that automakers globally are facing because China is restricting its exports of rare earth. It is the largest base for rare earths in the world. There are a few other pockets, something like a Brazil or something like in Australia, but not as much as China. And supply chains cannot shift very quickly. So what is the outlook for Mahindra and Mahindra? Does this affect growth in the automotive sector? What is the outlook? He's invested 3,051 or he's bought at a price of 3,051. He's got 18 shares. Should he hold on, Prashant?
I think continue to hold on. I think this is a temporary hurdle for the stock as well as the sector. I think Government of India is trying hard to get this resolved. I think we have 30 days to 40 days of inventory as an average. I think Mahindra may have a better inventory level. But again, valuations are comfortable. And if you see the recent growth, recent earnings, as well as the new sales from the BE6, I think the numbers are coming out very good. Going forward, I think 1 or 2 months, there will be some kind of volatility coming out because of the global issues. But again, I think with respect to the long-term investment, hold it for at least 3,800 to 3,900 from the current levels.
That's a view on Mahindra and Mahindra. A lot that is panning out for the company, apart from that rare earth story, of course, is the automotive division, a lot of which is driven by its SUVs and also its tractor segment, which is not doing too badly either. Let's figure out how the monsoon season goes. Oh, we've got a caller. Venkat is calling us from Hyderabad. Good morning, Venkat. How can we help you today?
Yeah, hi.
Hi. Please go ahead.
I have Gravita 18 shares around 2,360 rupees.
Okay.
Average price.
Okay.
Around 9,000 last. So should I average? Actually, I am holding for long term only. Is it good bet for long term?
Is this a good? So it is a lead producer, and so therefore any big move in metal prices globally tends to affect this company as well. Let me go to Prashant on this one. He's incurring a small loss, bought at levels of 2,360, which is elevated levels, but he's got only 18 shares. So materially speaking, he's not incurring a terrible loss. Is this a good opportunity to double down, in your opinion? What are the fundamentals?
Fundamentals are good. I think if you see, company has delivered a good growth profits of almost 50% CAGR from last 5 years. See, the view should be long term, not for short term. Again, short term, there will be a lot of hurdles, as you rightly said, with respect to rise in the metal price will have impact on Gravita as well as HEG. But again, with respect to valuations and PE, again, still at a very expensive level, trading at 40-45 PE, and historically it was trading at 25-30 PE. So I think for me, there can be some kind of consolidation in the price, consolidation in terms of earnings, but again, downside is limited, so recommended to hold it for long term, at least for a target of 2,000 from the current levels.
Okay, all right. By the way, just a small request to everybody tuning in. Mahima and myself are responding to queries as we see them. So we try and respond to as many as possible. We won't always get to you. Don't think that we're ignoring you on purpose. The next question we're taking is from Ashi, who's writing in from Hyderabad. IRFC is the counter that Ashi is invested in. 275 shares and making a healthy profit, if I'm not mistaken. I do not know the buy price, but they say that they've got gains of about 34,000 rupees. So bought quite a while back, I'm guessing. What's the outlook on the stock right now in terms of the technicals? Kush, what's the view on IRFC? Back in focus?
I think the entire lot is back in focus, and that's in a way a healthy sign for the entire pack. IRFC also has momentum broken above the 200-day moving average, continuing to do well. So he could book partially, at the current levels and hold the rest with a trailing stop loss near the 139 mark. Now, the reason I say that is because despite the kind of move that it has seen yesterday and the continuation, that you're seeing today, there is some negative RSI divergence setting up, which is suggesting that the momentum could now perhaps be fizzling out after the run that it's had over the last 3 to 4 sessions. So not a bad idea to maybe, take some money off the table and then hold the rest with a stop loss or a trailing stop loss, depending on his buy price, around the 139 mark. While the overall sector is shaping up well, profit booking, is par for the course, along the way for, at least something like the railway pack. So book partially, hold the rest.
Okay. All right. So the next question is from Vishal, who's writing in from Dubai, and he's got Nestle. Oh, actually, wait, let me read this properly. He's got shares in Nestle and he's looking to book those shares or sell those shares, which he's bought at levels of 1694, and he's holding Trent, but he's looking to shift from Nestle to Trent and wondering whether he should do so at this point. He says he's a long-term investor. So basically, he's trying to consolidate his holding in Trent by shifting out of Nestle. Should he do so is a question, Prashant.
I think both are in different sectors, so difficult to say yes or no for those things. But again, I am very much bullish.
Yes, okay, so it's a fair question. Let me put it this way. Maybe he's looking at the growth prospects between the two, and we've been talking about the slowdown in FMCG for some time. We're talking about grammage. And on the other end, Trent has had a phenomenal story. Of course, there are challenges that they're also facing, but who has the better growth prospects is the question.
I think Trent would be the better growth prospect, but with respect to valuations, again, the stock is trading at more than 100 P, so that would be not comfortable for me to say him to add at this point of time. Obviously, the story is good for quarter-on-quarter as well as for 12 months in the current levels. But again, any good correction in the stock by any reason, maybe because of profit booking or maybe because of some the earnings or some news in the stock or the counter, that would be a great time to add Trent for current levels.
Okay, all right. Shankar is calling us from Bengaluru. Hi, Shankar. Good morning to you. How can we help you today?
Good morning, sir.
Yeah.
Good morning, sir. Sir, I would like to, really appreciate both of you, Mahima as well as Alex,
Thank you so much,
encouraging and smooth way of handling things, and I'll appreciate it. And Kush is always smiling, and his technical views I really appreciate. And I wanted to know the view whether I can enter into Archean Chemical.
Okay.
ARCHEN, Archean Chemical Industry.
I have it.
It's a specialty chemical industry.
Yes.
Of course, its stock P is little higher than industry.
Yeah.
And book value is around 4.
Yeah.
And sales growth is negative for 3 years.
Yeah.
So fundamental and market cap to sales is also high.
Yeah.
So is it the right time to enter, or what can we do with this? I want a long-term investor.
Okay, I got your question. So, and you've done your research. You've looked at the numbers. The question is whether or not the growth prospects going forward would justify that slightly higher valuation than the peers. And as I look at the screen, you have a PAT number of 54 crore rupees, in the quarter gone by, and they have actually managed to improve their okay, let me just pull this up. Their so their PAT margin, their operating profit margin has actually declined. So maybe that is something that has had a bearing on the price as well in the recent past. Let's pull up the 1 month chart just to see how Archean has done in the recent past. Okay, it's not moved too much in the larger context, up about 3%. Do you have coverage, Prashant, and if so, would you enter this price for the long term?
No, we don't have any active coverage in this stock, but I think understanding the quarter 4 numbers, obviously that was the reason why the stock has come down a little bit and even consolidating at these levels. But again, if you see the products and the profile, they are doing really good. There is a good volume growth coming out with respect to the marine chemical, which is the largest supplier for marine chemical in India, and as well as industrial salt. So I think sector is good. I think there is something missing in the company which is giving a lot of pressure in terms of pressure in the EBITDA margin. So that should be a wait and watch for me, at least for 1 or 2 quarters. If the margins improve back to its 30% from the current 23%, so then I will be very much bullish on the stock. But time being, a good level, I am not here to comment on that.
Okay, so that's it with regards to where Archean Chemical stands. Our next caller, Hari, is calling in from Chennai. Hari, a very good morning to you. How can we help you?
Hi, good morning. This is Hari here. First of all, thanks for accepting the call, and it is always very good talking to your team.
Our pleasure, Hari.
My question is regarding NATCO Pharma. I have around 70 at the average price of like 1,470 or 460, 1,470. My question is now like whether I can average at this price. I know I am sitting at a loss. I stopped buying after the last quarterly result. After that, I stopped averaging it out. Now I don't know like whether we can accumulate this, because this quarterly result is also not good, and not sure like what is the prospect or what is there in the store to go ahead with this one.
Okay, got your question, Hari. I'll take this up with Kush. Kush, do you think NATCO Pharma, there's still some steam left where charts are concerned, or should he exit and book losses?
I'm afraid I'll have to be bearer of the bad news here. Despite the kind of stability that this stock is starting to show, there isn't any bit of momentum that is coming up, at all. In fact, all rise close to the 900 mark is being taken as an opportunity to sell, as has been the case about 2 to 3 times in this calendar year already. So doesn't look extremely exciting on the charts. My view on this one is an exit. I know he's in a bit of a loss, but that's what the charts are suggesting at the moment.
Chartically, it seems that the opinion is to sell, unfortunately. I just want to get a confirmation on this from the fundamental side as well, because sometimes you need a little bit of patience. Prashant, is it a case where for NATCO Pharma you should have patience, or should you book out right now?
See, I would like to go and wait and watch for a Q1 earnings as well as Q2 earnings. If there are some kind of improvement in the business dynamics, then only I think that would be a time to hold and then think of getting some kind of higher levels from the current level. But again, it's a time, correction of time, and even time, there will be a value of time going forward for next 6 months. But downside is limited for me from the current levels. If you see the stock is doing the consolidation right now. So, but if he has a guts to wait, and I think one or two quarters should be a time period he has to give it to the stock.
Okay, I know that I've spent a lot of time on this, but let me ask you, Kush, one last question. I know you've said sell, but if he decides to hold, where would you place your stop loss?
Great question, Alex. It'll be close to the 800 mark. You could choose anything between 8 to 815. That supports.
Okay, all right. Hopefully that answers your question. I've spent a lot of time on this. I hope that it benefits you. All right, Borosil Renewable is a question. Venkateswaralu. Please apologize. I apologize for mangling your name. Mr. Pagadala is writing in and asking about Borosil Renewable, bought at price of 541, 50 shares. He can hold for up to 1 year. He's in the green right now, but profit of only about 839 rupees. He's got 50 shares. Should he hold on is the question on the charts. Push?
Yes, he should continue to hold on. The stock's actually witnessed a good consolidation for the last 2 weeks. Base around the 530 mark, support around the 530 mark. Multiple times it has rebounded from that level. It's attempting a breakout, but given the market structure plus the lack of volume that you're seeing right now, is preventing that. As you said, the good thing is that he's in the green right now. So with the stop loss around the 530 mark, he should continue to hold. Next resistance levels or next targets on the upside are 575 And once that is taken out, 605 as well is the next level to watch for. So a hold with a stop loss at 530.
Okay, hold with a stop loss at 530 is the view coming on Borosil Renewables. Our next caller, Kanan, is calling in from Kerala. A very good morning to you, Kanan. How can we help you today?
Yeah, hello, good morning.
Go ahead with the query, Kanan.
Yeah, my query is regarding healthcare global enterprises.
Okay.
So I do not hold a stock currently. My query is if it is a good level to enter now, and I would also like to know a fundamental view for the next 2-3 years.
Okay, Kanan, I got your query. I'll take this up with Prashant. Prashant, healthcare global is the counter. Do you think this is the right time to enter, considering how fundamentals are playing out for the company right now?
Fundamentals, yes, I think giving a lot of comfort levels with respect to the business model, but not with respect to the PE valuation which the stock is currently trading at. Right level, I think my colleague can help him on that. But again, fundamentally, things are doing very good and they're managing their hospitals very well. EBITDA margins are improving, PATs are improving, even debt levels are decreasing. So I think fundamentally okay for me, but what level, I think my colleague can help.
Okay, all right. So that's the view on healthcare global. Let's take the next question to Kush. Kush, question to you. Harshit has got 5,000 shares of Reliance Power, bought at price of 59.27, and his expected target is 65 rupees. His stop loss is at 55. He's asking if this is the right trade. All right, so he's in the green, but he's wondering whether 65 is achievable. What's the view?
So Harshit, I think the question's brilliantly framed. I mean, he's got all the metrics very clear. Target, stop loss, all of that very, very well defined. So kudos on that. What I would now suggest is to keep a trailing stop loss. Yes, with the kind of momentum the stock is witnessing, 65 is a very much a probable and achievable number. Despite the kind of run that the stock has seen, it's not gone into overheated territories. Any overheated territory that it had, it's seen that cool off and then sort of corrected itself and now resuming that up move. So very healthy setup on this one. I would in fact suggest continue to hold beyond 65 as well for targets of 68 and above. But the only addition that I would like to make in his entire setup is that of a trailing stop loss, something that I've discussed I think a couple of times already by now. 58, 59 thereabouts, good support zone. Weekly support also around those levels. So you should keep a trailing stop loss around that mark and continue to hold. If it hits 65, trail your stop losses to 62.
Okay, so that's with regards to where charts are concerned for Reliance Power. Our next caller, Jijo, is calling in from Kerala. A very good morning to you, Jijo. How can we help you?
I was holding
Shyam Metallic?
250 stocks Shyam Metallic. Yeah.
Okay. Okay.
So average was 400. So I just want to know there is some tariff concern related metal stocks. So whether I hold or sell.
Okay.
And stop loss and all.
Okay, I got your question. I'll take this up with Prashant. Prashant, what he's pointing at is with regards to the metal stocks, and he's holding Shyam Metallics, but he's sitting on a profit of 1 lakh rupees right now. And this company has also decided to foray into wagon manufacturing very recently. What's the outlook like? Should he continue to hold or book some profits?
Very positive to hold for a short term to medium term. Again, I think long term would be a big story for the company with respect to the news which you said right now. But again, currently, I think the valuations are very much comfortable to advise him to hold at this point of time with at least 10-15% momentum from the current levels. As you know, the metal stocks are very volatile, but this company is doing really good and outperform the market recently. So continue to hold with a target of 1,000 rupees from the current levels.
All right. SJVN is the name of the counter, and Sujata is tuning in from Bengaluru. Thanks so much, Sujata, for writing in. You've got a holding of 518 shares in SJVN at a price of 71 rupees. Should she book profit is the question. She's holding with a decent amount of profit, 30% or thereabouts, right? Or what would you do, or more than 30% actually. So what would you do with this, Kush?
Alex, I'd continue to hold. Even in the correction that the stock witnessed recently, along with the rest of the markets, it didn't test those buying levels. Now you're seeing some sort of an uptick on this. The momentum is missing, and that is quite understandable. Sometimes it takes a while for the momentum to kick in. But on the whole, if you see the medium-term setup has turned positive, there will be a mild resistance around the 107, 106 mark where the 200-day moving averages. So some supply zone might come in. But on the whole, as I said, the tide seems to be turning on this one. But it could be a slow, gradual uptick. So with a stop loss around the 95 mark, which is a good support zone for this stock, continue to hold on to SJVN on the upside. Once this 107 level is taken out, you could see stock head to 112 and then about 120 levels.
All right, Siddharth is calling us from the home of chilies, Guntur. Siddharth, very good morning. How can we help you today?
Good morning, sir. I'm holding Deepak Nitrite 40 shares.
Okay.
Average price 1860 rupees, sir.
Right.
I'm holding from last 3 years, sir.
Okay.
Should I exit and where should I park my money?
Okay.
Should I continue to hold this? Every time it is a disappointing result, sir. And there is no much price momentum. And I want to shift to, I want to sell and shift to one company. Whether it is good or bad, please tell me, sir. Kirloskar Pneumatic.
Okay, Kirloskar Pneumatics is the company that you have identified. Why do you like Kirloskar Pneumatics?
Sir, Kirloskar Group was settling its queries and it is showing technically somewhat good strength and results are somewhat better. It is sustaining about 1300. So 1300 above technically it's showing good strength. So in 3 to 6 months would I able to get a price movement up to 1700, 800. So I want to shift. So there is a good momentum compared to Deepak Nitrite.
Yes. Okay, so you got a well-researched question. Kush, the question is, does the strategy make sense? Book out of Deepak Nitrite. He's not booking a loss. He's booking a small profit. Is there potential to hit 1700 on a stock that has gained as much as, actually it's not gained. It's gained as much as 29% over the last 3 months. So it's done reasonably well for itself.
So it's a very good trade, Alex, that he's looking at. Deepak Nitrite has been consolidating with a negative bias, trying to find support, but hasn't really been able to. So an exit out of Deepak Nitrite is understandable. Kirloskar Pneumatic by a very interesting one, and it's purely a coincidence that just this morning on our advisory we've initiated a call on Kirloskar Pneumatic with very short-term targets of 1370 and 1410 with a stop loss around the 1290 mark. So yes, from a technical standpoint, also Kirloskar Pneumatic is looking very interesting. The moves on this one for the recent past have been excellent. 200-day moving average cross. I won't be surprised to see that, like the other Kirloskar Group companies have done, this one also builds on the recent momentum and heads much higher. But at least for targets of 1410 and above, Kirloskar Pneumatic does look like a good buy at the current level.
Okay, so that's with regards to where Kirloskar, of course, the question was on Deepak Nitrite, but Kush prefers Kirloskar is the view coming in with respect to where charts are concerned. Our next caller, Ella, is calling in from Pune. A very good morning to you. How can we help you?
Morning to you too. And I wanted to know, I have bought ABB shares, which I have bought some 20 years back. Okay. And if I mistake not, it was at the price of say 1,000 rupees per share. Okay. And I have 2,000 ABB shares. Okay. And plus they gave me, what should I say, a bonus share of Hitachi. Okay. So I got 400 Hitachi also. Understood. So now I am sitting on 400 Hitachi and 2,000 ABB, and it's a quite substantial profit at this time. Should I book the profit or should I keep them on?
Right. So first of all, congratulations.
Encashing this.
Okay, understood, Ella. And congratulations, because you're sitting on a significant profit of 76 lakhs rupees right now. So that's quite significant.
But I have a question for you, Ella. Do you need the funds right now?
Yeah.
No, I don't need the funds, but I should not, because what I saw is in September 2004, I lost 1 crore in ABB.
Wow, yeah.
One instead.
Yeah.
Yeah.
And that's tough to take.
I was just wondering, what should I be doing with these shares,
So let me ask you.
Because there are 2,000 ABB and 400 Hitachi.
Yes.
And I have not spent anything much on them because I have bought them 20 years back.
No, that's a fair question. So let me ask you this. As a percentage of your overall equity portfolio, is this a very sizable chunk? Is this more than half, for example?
Yes, it would be.
Okay, so there is concentration, right? So therefore, from that perspective, it might be a better idea for you to have a diversification in your stock portfolio. And let me ask Prashant to suggest some options for you. Prashant, she's holding these two stocks. As she said, her capital cost is not very much. Notionally, she's lost money. It's painful, of course, but she can still rectify that. Where should she put the money right now?
I think there should be like a similar business like cements that can be a better option for hardcore to diversify. But again, obviously, yes, one should try to book profits and then diversify themselves, and not having a lot of high concentration on the portfolio, where she has experienced recently with respect to the fall in the price of ABB has made her a loss of 1 crore. So I think cements can be a better alternative if she books profit at current levels.
All right, we have our next question from Abhishek, who's writing in from Pondicherry. He's bought Ola 500 shares at 49.8 for a piece. Wants to know whether he can continue to hold or sell. Prashant, I'll again come to you on this one. What's your outlook like where Ola Electric is concerned?
See, I am very much bullish on the sector, but again, Ola has a lot of hurdles for the near term at least. So now I think with respect to all the issues which are rising with respect to the earth magnet and all, I think that will create a lot of pressure in the two-wheeler segment, where Ola as well as Ather will have a lot of supply chain issues. So short-term issues will create a lot of volatility, but again, a stock with near to 40-45 can be a good range to have accumulate for long-term. I think long-term there is a good story, at least for a target of 75 to 80.
Okay, all right. So that's the view on Ola Electric. Headwinds right now being faced. But that brings us to the end of this edition of Ask Profit. Gentlemen, thanks so much for joining in. Prashant as well as Coach, always a pleasure having you. And look forward to the next chat, Prashant. All right, like I said, that's the end of this particular edition of Ask Profit. We've covered quite a bit of ground, and hopefully the stocks that we've discussed today have benefited you. From Mahima and myself and the team that put this show together, thank you so much for watching, and do stay tuned. Up next is KYC.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.